Well, hello, Maverick Traders. This is Rob Reinhold. This is the Trading Room, and we just wrapped up July monthly options exercitation. And I just want to give a congratulations to everyone. You guys all killed it this month. This was a great month. Can't wait to do the accounting and payouts next week. But that's only 1 month, so let's just keep going. In this session, we're going to talk about the news of the week. We're going to look at the current market. We're going to score everything from +3 to -3 in our sectors. And then we've got some trades.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
All right, so let's talk about last week's news. The S&P and NASDAQ were up slightly this week, consolidating at all-time highs. We're going to take a look at the chart, and it's just a beautiful, beautiful high base pattern, looking like it wants to break higher. We don't know when, but it's going to be fairly soon, I think. We have lots of tariff drama, and this week was the week that I really thought that the bulls firmly established control. There was bad news out there on tariffs. There were threats. There were letters sent. There is this August 1st deadline that has got to be worrying people. Any selling was met with overwhelming buying. Markets totally shook it off. So look, no one knows what's going to happen, but here's what I've learned. The market is really, really good at determining what is the most likely thing to happen. Every so often we get these black swan events that they can't figure out, but this is not really one of them. The market is saying that everything's going to be just fine. And so they're pricing that in. We also have earnings season going on right now, and the earnings are coming out, and they're good enough. They're not great, but they're not terrible. They're good enough for the market to continue to march higher. I want to talk about a few economic reports we got last week. Let's talk about the CPI. CPI really turned out to be nothing. It was slightly less on core CPI, slightly higher on the year over year. So let's call that a mixed report. The bond market for the first day or two after actually crept higher, saying that there's now less chance of a Fed rate cut. But we also heard on Friday from Governor Waller that he was going to be voting for a July rate cut. So as you can see here, the market is really pretty balanced here, and that's why we see bonds trading, the 10-year bond trading between 4.2 and 4.6% for the last couple of months. The big number, in my opinion, that we got last week was this retail sales. Look at that number. That's a really impressive number. Last month was -0.9. It was actually revised higher on the core. These are good numbers. So anyone who is one of my perma bears, and you're saying, I don't believe this market is getting way ahead of itself, look at the economy. The economy is cranking along just fine. It's not a crazy economy. It's more like a 2% growth, but we had 2% growth through the entire 2010 to 2020, and the markets were well above their historical averages. So if you are a perma bear, I've been trying to say this to you for the last 2 months, plug your nose and buy. That's it, plug your nose and buy. All right, let's go look at the markets and look at some of the charts here. Last week, Dow was flat, S&P up 0.5%, NASDAQ up 1.5%. Oil, it's funny because last week, all I had to do is change the positive to a negative. Last week, oil was up exactly 3.29% last week, and it was down -3.29. So oil is basically flat, going nowhere. Here is the chart, and you can see this is just a beautiful high base pattern. When you rip higher, 6 or 7% on the S&P, and no one is selling, and any selling days are being met with buying. Any long lower shadow is bought up and it closes as a green candle. This is just, look, we had one little bad day. This is just a very, very strong chart. Typically, we don't get a breakout until the 20-day moving average pushes up into the candles, but The market doesn't have to do anything we think it should do. It doesn't have to wait for that. It can break out on Monday, Tuesday. It can break out whenever it wants. But this high base pattern is a really, really good long setup because we got tired here. Now, that was a big run and we got tired. We have now rested for about the same period of time as that expansion. I think it's just a matter of time before we break out of this high base and go higher. NASDAQ is just creeping higher. I love these rising bases. When I was a young trader, I hated these because, I wanted to get that pullback. I wanted to get that discount. I didn't want to be chasing it. And these rising bases never gave you any of that opportunity. And then what happens is they typically then get the nice breakout to the upside. I now look at this and say, hey, it's ready to go right now. You can get in right now because it's going to creep higher until it explodes higher. So as long as you give things enough time, it's going to be a really nice setup here on the Qs. I want to draw just a line here on this chart. This is the heat map of last week. Take a look at everything to the left. It is mostly green. Take a look at everything to the right. It's mostly red with just a real big bunch of red in healthcare and energy and materials. So large cap tech, large cap financials doing really well. Everything else doing okay. I do have to point out the industrials, which has been one of my favorite groups, is just cranking higher. So utilities and industrials, mostly green over here. So let's talk about this week. Plus three market, low volatility, very bullish. This is where markets run. And I talked about this either last week or the week before, is this is where, stuff like the NVIDIAs and the Googles, they've already run a ton. This is where then the secondary things have already run as well. This is where you start to get a lot of the garbage. I don't mean that in a mean way, but the more speculative names that don't really have the fundamentals to justify, they go up in situations like this. This is the exact environment that we got the GameStop saga, where we got the AMC thing. This is where things get really, really hot. We saw Ethereum go up 20% this last week. Things are just going to get hot, and it doesn't make a lot of sense. And if you are slow and steady wins the race, you're probably going to be frustrated with these kind of markets. But this is where we are. We aren't through the tariffs yet. The market is through them. The market has left them behind. We could get a little drama, but I'm telling you, those are the days. If we get a 1%, 2% down day, that is a great entry point. And I know that sounds crazy because the reason it's down 2% is because the news is really horrible and will most likely make it to where you say, see, I knew it. I knew it was all going to fall apart, and you're not going to want to buy. Take the opportunity. If we get any big down days, take those opportunities as your days to enter new bulls. I don't think you want to be just entering a whole bunch of new bullish stuff just right here, right now. But if we get that pullback, I think that's a great opportunity. And of course, we are right in the middle of earnings season, so check earnings on all your trades. Make sure you're in the right kind of positions. This week, really only one thing I see that's even important, and that's going to be durable goods on Friday. But take a look at those durable goods and the order number. Last month, 16%. This month, -10%. Look, there's a whole lot of tariff stuff going on. If you just take a look at the core, looking at for flat, that's a solid number. Again, the market's going to be just fine if it comes out at around flat here. So we're at a +3 market. I think this week is a +1. I think we just keep creeping higher. I'm not sure we get this big, exciting breakout candle on the S&P. I could just see us creeping up and adding another 0.5% this week, maybe 1%, and only have it be very small, tight candles. I see that as a really good possibility, not having an exciting breakout, but just kind of push up, just have a nice, slow, steady grind higher. All right, let's take a look at the sectors, see what's going on under the hood. Last week, best sector was tech, followed by utilities. I'm going to show you the utilities chart here in just a second. It looks awesome. And look, throughout most of my trading career, utilities have been about the most boring thing out there. Every now and then they get a little exciting. But right now, utilities is acting like tech. And there are some stocks in there that are really having some big runs. I think this is a really good opportunity if you don't have any utilities. The sector chart looks awesome. It looks absolutely fantastic. Healthcare looks abysmal here, especially the health insurance companies. I think they're all a short. Take a look at stocks like United Healthcare, which I really like. I talked about that on Tuesday as a short. CNC, which is a big insurer. Take a look. They've lost half of their value here just over the last 2 weeks. This sector is in some trouble. I think health insurance, if you're looking for a good short, I think that's where you go. And then take a look at materials and energy, turning down here this week. They are all going to get a downgrade as well. Let's take a look at the sector charts. Here's what I'm talking about. Take a look at this just build. We got this build over the last 2 months, creeping higher, creeping higher. This candle on Friday, just a beautiful breakout. This is an absolute gone from +2 to +3, and this thing looks like it's got some power. It's consolidated for 2 months, 2.5, maybe 3 months, and now it's breaking out. It's got some power behind it. I like this one. This is my favorite sector out there at the moment. Next up, comm services. Now, last week we downgraded from a +3 to a +2, and I got to say that this bounce is pretty lethargic. I'm not super excited to jump back into communication services, and frankly, I'm actually not doing a trade in communication services. We had a Google trade roll off for a max gain. I actually don't feel like getting back in the sector here because the sector chart looks so bad. I'm going to go hunt elsewhere. Still at a +2, but definitely not bouncing like it should. Over to real estate. This is a zero gets. Moving averages literally piled up on top of each other. There's no reason to be anything other than a 0 here. Healthcare was a +1, and now we can see it has moved down to a -1, and it's got some momentum to it. These candles are pretty ugly. Pretty ugly candles here. -1 could go to a -2 if there's more selling this week. Next up, industrials, another one of my favorites. Been a +3 for a long time. Going to stay a +3. Everything's great about this. Look at the one day where we actually got some selling, and then they went in and bought it up, and it ended up closing up that day. So +3 on industrials, +3 on financials. Financials did come back just like communication services, but they bounced. That's a big difference. And that's why this is going to go to a +3 and communication services is going to stay at a +2 because of this bounce. Next up is consumer discretionary. This is my second favorite sector this week. Take a look at this beautiful, beautiful high base. So we based here for a while. We broke out. We consolidated again. This thing is just gathering power. I don't see any reason why we don't get a nice breakout in consumer. That retail sales report was a great report for this sector. +3, it's going to stay there. This is the consumer staples. This is defensive. It's a 0. Trading it between the moving averages, and the moving averages are flat. So that makes this a 0. Tech was a +3. It just simply stays a +3. Just there's nothing but upside here in tech. Could there be a pullback at any time? Sure there is. If there is, there's probably going to be some money there buying into tech on any pullback. Here is materials, and you can see that we are downgrading materials here. It was a +3, and we now have down here right near the moving averages. It had a decent bounce. I like it better than like comm services, but it's still just a 2. It's not quite cleared out of that moving average yet, so +2 on materials. And then here we've got energy, and here we are between the moving averages. One moving average going up, one going down. That's a 0. Energy, not really clear where the trend is at the moment. Here's where we were last week. So on the downgrades, we got 3 stocks or 3 sectors downgraded. We got energy, healthcare, materials all moving lower, and we've got one going higher, and that's utilities. So utilities, consumer, financials, industrials, tech, those are your outperformers. Healthcare, real estate, energy, and staples, those are your underperformers. I think that's where you should go look for some trades. Okay, here's what we have rolling off this last week. We had 5 trades rolling off. We had 3 rolling off for wins, 2 rolling off for losses. So again, it was a great July, but right at the end, it was a decent little close here. We're left with 5 trades on, and they're overwhelmingly bullish. As you can see, sorry, that's 6 trades. You can see that we don't have any bears. We have no bears working at all, and we're mostly sitting at the +2 trades. However, that's exactly where we want to be. We got a +3 market. This is our allocation. So it's telling us this is how many trades you can have in each sector here, or sorry, each slot. This is how bullish you can get. As you can see here, I want to add on a couple new bulls in some of the strong sectors. I really debated going +3 in utilities. If you wanted to, I think it's a good trade here, but I'm going to go +2. I just can't get my brain to go +3 in utilities. It's a very rare thing. And I'm also going to do a +1 in financials. So I'm going to add a little bit more bullishness on, but then I'm going to attack those weak sectors where I had some trades roll off and just look to do slightly bearish or neutral ones at that. So putting on 5 new trades this week. Let's go ahead and take a look at some of those stock charts. First up in utilities, this is Vistra. So Vistra it's acting like a tech stock. This was a $100 stock about 4 months ago. It's up to $200. Utility stocks typically don't double, but this is from the AI boom. This is the AI boom, meaning there's going to be a huge demand for power, and these are one of the companies that are doing it. High basing here. I love taking positions off of the bounce on the high base. This one had a big bounce on Friday, bounced up 6.5%. But this is where it's probably going to break out somewhere in the next 2 to 3 weeks. We have no idea when. I think you can pick this up anywhere. I used to wait for the breakout, the breakout of 200. But then I found out that a lot of times I didn't catch the breakout because sometimes it happens so quick or I wasn't behind a system. I just like to get into these now and give myself enough time. Just say, hey, you know what? I'm not going to try for the perfect timing. I'm just going to grab it in the base, give it enough time, and let this thing break out for me to the upside. And that's exactly what I'm going to do here. I'm going to go out to August 1st. Sorry, I'm going to go out to August 8th. So this is going to give me 3 weeks. I'm going to do the 192.50, 205. So basically, I'm looking forward to play it in this range here. So 205, that's what I'm asking you to do within the next 3 weeks. If you want to be a little bit less bullish, okay, you can do something like this. If you want to be more bullish, I like the August 15th. Just do like the 185 or 180 calls. I think that is the most aggressive play you can do. And this thing could run up to 220. I don't see any reason why it doesn't get to 220 here in the next couple of weeks. As long as that sector breakout holds, I don't see any reason why this thing doesn't break out and at least put on 10%, which would be about 220 above its past high. Right, moving on next to real estate. We're going to be at a -1 trade on real estate. So I had to go out and find a trade that fit my -1 outlook in real estate. And I found this wedge pattern here on Weyerhaeuser. So it's breaking down. Look, I'm not thinking that this is going to be a huge crash. I don't think this is going to break through this pretty heavy support here in the mid-24s. But remember, I'm only looking to be a -1, which means it just needs to stay where it is and go just a little bit lower. So that's going to be the August 15th. There's only monthlies on this. The August 15th, 25.26. Bear put spread. As you can see here, it's already down near the low of the range. It just needs to close below 25 by August 15th for a max gain on this one. So slightly bearish here in the real estate sector. Financials was the other bull I wanted to put on. I wanted to put on a +1 trade in financials. So remember, the way that this slot system works is I already determined that I was going to do a +1 trade in financials. Before I even looked at a chart, I predetermined this. Now, I could go out and try to find the greatest stock chart in the financials, the one that has the most upside. But I'm doing a +1 trade. I'm going to be doing a bull call spread at 60 delta, meaning that I've only got 40 delta upside. it doesn't make a lot of sense for me to go after volatility and after wild trades, because the way I'm going to structure my trade is I don't have a lot of upside to it. This is a theta and slightly bullish delta play, a +1. So I'm already going out looking for a different kind of stock. I'm looking for a stock that is not going to go down. I don't need it to go up. I just need it to not go down. And this is why I like Goldman Sachs. Goldman Sachs, nice base here. It is consolidating this monster run from 620 up to 720. We're consolidating, but you can see below 700, there's just a floor there. There is a floor there, and anytime it gets to that point, people want it. I'm going to do the 700, 710 bull call spread going out for 2 weeks. So it just needs to be above 710 within 2 weeks, and that's going to be a nice trade on that one. You can play this one a little bit more bullish. I think 720 is a pretty easy target. If you want to play it even more bullish, if it does break out, I don't see any reason why it doesn't go up to 740. But for me, I've already predetermined I'm going to be a +1 in this sector. Next up, consumer staples. This was our other bearish trade we wanted to open up. So again, I needed to find something that was bearish, but I don't need it to be crashing. Like if I wanted to be in something that was crashing, I would be in United Health. I would be in CNC. I would be in one of the health insurance things that are just falling off the table here. I don't want that in a -1 trade. I don't want volatility. I just want something that stays down and works its way a little bit lower. So here is Monster Beverage Corporation. You can see your big fall. We're just consolidating here. There's no reason, if we just give this thing enough time, that this thing doesn't just work its way down. There is some support down here at the 58 area, so that's where we're going to go. We're going to go to the 58 area. That's where we're going to put our trade on, the 58.60 bear put spread. It's going to be a little bit of delta, a little bit of theta. We just need this thing to, again, stay weak and just work its way down a little bit towards that 58, going out 2 weeks to August 1st. And our last trade, materials, we were going to be a 0. So again, I'm looking for something that is in a range. Here is Rio Tinto, and you can see the ultimate range on this is, let's call it 56 to 63. This is the range. That's about a 10% range. We need to find the midpoint. We need to find the midpoint. Now, this stock only has $2.50 strikes. So my choices are the 62.50, the 60, and the 57.50. If I was slightly bullish this stock and sector, I would do the 62.50. I do the 60, 62.50, 65, and let it float its way up into that butterfly. If I was bearish, I would do it just the opposite, but I'm neither, so I'm going to do the one that's right in the middle here, looking to open up that butterfly right in this area. So we're going to go to the 55, 60, 65. So we're going to open up this butterfly, and our profit window is going to be right in here. It's going to be right in this area. So truly a neutral trade here on Rio Tinto. Let's go ahead and wrap this up. The markets are bullish. I've been really trying to convince all of my perma bears out there to not fight this. These are the moments. I used to hate these markets because I would fight them and I would not believe in them and I wouldn't be the idiot that buys into them. And finally, I realized I'm the idiot. I knew that it was likely going higher, but I was too scared to get in because I didn't want to be one of those idiots that bought at the top. So I just sat on the sideline and made fun of them for being idiots while they're making all the money and I'm sitting there just twiddling my thumbs. I finally said, Rob, what are you doing? It's clear. The market's going up. At some point it'll end. You've got the skills to recognize that. You've got the risk management to handle it. Just go for it. Go with it. And now it's like, I love these markets. I love these markets when they get stupid. This is where you can make a lot of money during a year. You only get a couple of these months during the year, so you got to take advantage of them. Of course, things can always change. That's why we do daily recap videos. That's why we're always talking. But the markets are in a good place at the moment, and I don't see any reason other than some unexpected tariff news that can possibly sink this. And again, that's a black swan event. The market is saying, we don't believe that's going to happen. The market's really good. Again, I call it the market, but do you understand? The market is like investment banks that spend billions of dollars on research, that this is the call that they're making. We don't have billions of dollars to spend on research, but we can just follow what they're doing. And right now, all of their research is saying tariffs aren't going to be an issue for this economy. You should be long stocks. So get on board. At some point, it'll end. We'll have to make adjustments, but until then, let's just keep riding this train higher. Everyone have a good weekend. See you later. Goodbye.